Unlike anything else on radio today, it's a front row seat for great information with today's leading experts. The Millionaire Maker, Hilary Kramer.
When we're not featuring the underwater basket weaving talents of the Syracuse Orange, we're talking money on Mondays, and grateful to do so. Hilary Kramer, my compatriot here on the Money Night, and Hilary, if you were a stockholder today, NASDAQ up 2 points. The Dow Jones finished up a point. S&P up about 1.5 points. You liked what you saw. You had a pretty good day. The futures are slightly down, but I don't think that we're off to a really bad situation for tomorrow. And I got to say, if people have been listening to this show over the last 2 weeks, they've made money because Sunrun, Mobileye, and a bunch of others that you've been talking about, Fibro, etc., all in the black and doing better almost by the day. Welcome back, Hilary Kramer. What are your thoughts here on this January 23rd?
We will have another really good, solid 3 to 4 days, and then there might be a hesitation as we wait for the Fed decision, which will come out. It's a 2-day meeting, but February 1st is the big day, and that will determine whether or not the market's just going to catch on fire and continue to rise. There's a lot of pent-up demand. There's a lot of money on the sidelines. I'm not trying to say that everybody who jumps in is going to get rich right here, but this is the time that you buy. This is the time. Look, if we've already put a bottom in, we put the bottom in about 10% ago. That's okay. We were down 25 to 30%, depending what indices. Everyone should be really excited about what's coming. So really, I mean, look, let me just read off real quick. Recent layoffs. What do recent layoffs include? PayPal, Peloton, Netflix, Shopify, Zillow, DoorDash, Amazon, Carvana, Robinhood, Snap, Stripe, Rivian, Coinbase, Klarna. I mean, the Micron. I mean, the list is unreal. You know, Tesla, of course, Hewlett Packard, and then the big one in terms of percentage, but not necessarily in whole numbers, is Twitter. Right, that was a bloodbath over there, and it's been that way at a lot of companies. But that doesn't. But there's opportunity. There was too much froth.
You told me over the weekend that when people see layoffs, you know, there's a tendency for some to think, well, that means the economy's bad. But for stockholders, for people that are buying shares in the market, that's actually perceived as a positive. I think I understand the fiscal rationale behind that, but explain it for the people that don't understand.
That when we buy in this market, you are actually setting yourself up for some big wins down the road. The best way to put it is always buy when there's blood in the street.
Okay.
that
a little
kind
brutal, but I understand.
That says it all. I mean, let's talk about the Fed rate hikes. And I want to make sure, in case anybody has been on Mars for the last 2 years and has missed all of the, all of the big stories, starting March 17th of 2022, the Fed raised rates 25 basis points, which means 0.25%. Which means 0.25%. In May, 0.5%. 0.75% in June. Next month, another 0.75%. September 21st, another 0.75%. The same for November 5th. Then on December 14th, Fed rate hike was 0.5%. These are massive for when anybody wants to be buying real estate, because the 10-year yield, U.S. Treasury yield, is directly correlated to the 30-year fixed mortgage. So as soon as a rate rises, it goes and it hits the 30-year mortgage. So that is the equation everyone needs to understand. Rates go up, your mortgage rates are going to go up. Now, luckily, things are a little bit safer and a little bit better than they were. But it's not really over. Now, what may be over are some of the big box stores. You know, we have had some really good winners, by the way. I was looking at the holiday winners. Lululemon had a really good holiday. It's at $323.
Well,
Dick's did
that was
well.
those 12 yoga mats I bought. If I hadn't bought those, they wouldn't have done so well. But I went ahead and bought them.
Lulu has not found anything to replace it. That's what we also have to think about. Are there replaceable, what's replaceable? You can replace Starbucks with Dunkin' Donuts, right?
Not really, but yes, I understand the general point that you're getting at.
It's actually it's a good question, but
Dunkin' doesn't burn
it.
their beans for one thing, and I think that's Starbucks' drawback, but that's a different conversation.
Okay, but basically everyone should be fairly optimistic and excited about the future, even though we may see another drop. If we have another drop, or even better yet, some capitulation where the market goes down a lot, and capitulation is basically when the market throws up, meaning that everyone throws the towel in.
Right.
That's when you should be buying. So we may not see it. If we see it, I'm in big. I'm in really big. And everyone should understand you don't have to be in with lots and lots of concentration to make tons of money. You buy $20,000 of the right stock, you're at $100,000 if, a year later.
Which is going to be a return that anybody would take.
Right. Or you buy the right stock and you spend $20,000, has a nice dividend yield, and you end up a year later with $24,000 and some dividend, you end up with $26,000. I'll take that any day of the week.
Sure.
So that's what we really have to be thinking about, are those kinds of opportunities out there,
So your final assessment on layoffs, because there's been a ton, and you only mentioned a few, but you've got Google, Microsoft, Amazon, Coinbase, DirecTV, Salesforce. These are all companies that are big, that have been working. They didn't disappear during the pandemic. They were still around, but now they're laying off anywhere from 8 to 11 to 12% of their workforce.
Right, exactly. Or in the case of Twitter, what was it? Over 50% of their workforce. Yeah. And don't forget, some people are true layoffs, and others are just considered voluntary separations. Those aren't included, the voluntary separations.
Okay.
That's that first run of people who might be older or ready for retirement in a few years, or who haven't been doing really well on their on their quarterly HR reviews, where they kind of bring them in and say, you want to think about going, and we'll make it sweet for you. Yeah, exactly. So the numbers are actually quite deceiving, but everybody have heart. This is the time to make money. This is the time. This is when you can really turn it around. And, Microsoft doing layoffs here, God, Microsoft is coming back. There's no question about it. Netflix, stronger than ever. Stronger. We're going to talk about that later. Micron doing well. NVIDIA, they had a very high-quality video card that was going for $1,200, went down in May and June to about $600, and now it's back up to $1,000.
Wow!
So prices are coming back. We're in a good place. Just everyone should believe it, that we're in a good place. What you want to understand, though, is that your tomorrow's winner is not Facebook. Tomorrow's winner might be exactly what we've given you. It might very well be Mobileye and Sunrun.
There you go. We'll talk more about that. Kevin McCullough is paired up with Hilary Kramer, who then loves to talk with us about all of the wins in the market. And Hilary, I said this in the first segment, but if people were paying attention a couple of weeks ago, Sunrun and Mobileye, and I'm talking 6-7% to the positive since you mentioned those just a couple of weeks ago. But introduce our next guest, because we're going to talk about something that's kind of fun here and something I know absolutely nothing about.
Okay, well, it's cryptocurrency, and it's a very important, and it's here to stay, part of our economy, part of the ethos of not just this country, but of the world. And just like the internet, when it first emerged, there were fits and starts. We are going to see the same, and we are seeing the same when it comes to cryptocurrency. When I say cryptocurrency, I'm talking about digital currency, referring to tokenization, where people have tokens issued from a company, which is something else we can talk to Alan about.
Sure.
And Alan is actually an incredibly, well, first of all, he's a kind, wonderful, compassionate human being, which is unbelievably, as we all know, really what it all comes down to in terms of being important.
That's right.
But there's also his background, which is just really incredible. He's been in the financial institution arena, for close to 30 years. And he was one of the first in regulated cryptocurrency, digital asset trading. He has been with the INX company, of which I want to make sure that I have full disclosure for everyone. I am on the board of INX, and I thought that Alan is the most appropriate person to talk about digitalization, tokens, and why we shouldn't fear what happened with Sam Bankman-Fried, who, literally more billions than we realize has been gone. So let's just go right there.
Alan
I think
Silber,
that was
CEO, North America Director for INX.co. Thanks for being with us. You're on Money Monday. Welcome.
Thank you for having me. And Hilary, thank you for a lovely introduction.
And I could have kept going. I could have taken the entire segment and done nothing but talk about you, Alan.
Help me understand the significance of why crypto, first of all, has become such a big deal. And in light of the Bankman-Fried scare, and I will say that there's been some angst, obviously, in the sector because of that. What do we need to keep in mind and not keep in mind because of his situation specifically? But start with the bigger picture.
Yeah, I think with the advent of Bitcoin, and it's going on over 10 years, it really just brought about democratization of money. So, before Bitcoin, and Bitcoin is like a pure peer-to-peer currency, there was always a middle party involved. Right. So if you wire money to overseas, there's always a middleman. If you pay on PayPal, there's always a middleman. If you send money to your family in Africa, then there's always a middleman. And I think, what you've seen in global society in general is like this less and less trust with third parties and government and how they manage our money. And so this kind of like fits in perfectly with the times. And, and also an increasingly digital world. So, so instead of a family sending money to their family back home in Africa and pay Western Union 15% or 20%, they could literally send it from their phone, to their phone for cents in a matter of, minutes. And there's many use cases for it, but in general, it's democratized money, and you don't have to trust any third party. The way that the Bitcoin ledger is set up, it's that all these machines around the world maintain the ledger of all the transactions, and you have billions and billions of dollars of these machines that govern the ledger that all the transactions are on. So it's essentially impossible to hack it or to put fraudulent transactions in or erase transactions, and so you have the most secure kind of database in the world that's regulating the transactions without any middleman at all. So that's kind of it in a nutshell.
That's the theoretical idea. But talk to me about because it wasn't just Fried. There were problems. I mean, Bitcoin has had a couple of them, but really it's been more in the space of the other cryptos that I think have had some of the problems as well. But people have figured out how to game it on some level. So, and I know that even when you're talking about any new technology, there's always stumbling, getting out of the gate to get it up and running. I mean, the first car didn't work very well, and the Wright brothers only flew for a few seconds when they got that thing off the ground. So where are we at in the progression of crypto becoming that kind of bulletproof, reliable currency that you envision and that you just described in light of some of these issues?
Yeah, and so Bitcoin is definitely the anchor of the whole space. So it is a true decentralized currency that is pretty resilient to getting gamed, or I mean, it's absolutely impossible to mess with the system. It's operated, its uptime has been 99.99% of the time for years without any money lost into the system. But the upside, there's upsides and downsides to open source software, right? Like, the fact that Bitcoin is open source software kind of contributes to its security, and that everybody can see the code, and it's been, diced and chopped up and looked into and delved into, right, and tried to be hacked into. And then the downside of open source software is that any Tom, Dick, and Harry can go, copy the Bitcoin code, can change one line of code, can call it taco coin, and now you have, some, crazy like penny stock like coin out there that's trading. And so, so hence we have thousands and thousands of coins. The vast majority of them, the only purpose they serve are for people to gamble. I mean, totally truthfully. And, 99% of them just have, no redeeming qualities or value. So that being said, INX came along, it was late 2017. So cryptocurrencies kind of morphed into tokens, and tokens were like a coin like Bitcoin, but programmable. So people would say, okay, we have this underlying business, and if you buy one of our tokens, we'll give you a certain percentage of our profits every year. And it started, like you're alluding to, in 2017-ish was a big wave of these, what they're called initial coin offerings, like token IPOs, and they were done with little or no regulation. And, a lot of people got scammed, and, same thing, open source software, people just created these things out of thin air. It was a great bull market environment to sell anything, and it was a mess at that time.